Hi dear traders, the US debt ceiling issue was not resolved last week. For your reference, this is not a rare case. Previously, the US government managed to reach an agreement on the debt ceiling just a few hours away from announcing default. So talks between lawmakers still continue and may go on until June 5, when, according to the US Treasury, the government will run out of money. Financial markets seem to have lost interest in this topic for now. Let's discuss what shaped their sentiment last week. The US dollar index, which demonstrates its value against the basket of 6 major currencies, closed the weekly session with a gain of 0.5%, marking its second straight week of growth. The main drivers for the greenback were comments made by Fed officials. Most of them maintain a hawkish stance on the future monetary policy and hint at another rate hike. On Friday, markets expected some clarity from Jerome Powell's speech, yet he simply confirmed the words of other FOMC members, saying that inflation is still far from the target level of 2% and that the Fed needs to take measures to slow down price growth. At the same time, he added that amid the current banking turmoil, it might be wise not to raise the rate too high. Meanwhile, the euro retreated against a strong US dollar and lost 0.5%. The euro-dollar pair was hovering near the 12-month high. The European Central Bank is also determined to pursue tight monetary policy in order to tame inflation. Still, traders prefer to buy the greenback, even despite the fact that the Eurozone GDP was revised upwards. The pound-dollar pair was rather volatile this week. The price is still fluctuating near the 12-month high as the Bank of England is ready to raise the rate further to curb inflation. In fact, the regulator's interest rate is holding at 4.5%, its highest level since 2008. The upbeat report on Japan's economic growth was not enough to shift investors' focus. The US dollar is dominating here as well, having gained 1.53% against the Japanese yen. Apparently, traders were disappointed by the inflation report, which showed acceleration in consumer prices. This requires the Bank of Japan to take measures. Meanwhile, the yen is trading near the 6-month low against the dollar due to the Fed's more aggressive policy. The precious metal also came under pressure from a stronger US dollar. Gold was trading with a decline at $1,970 per troy ounce. There is a 40% probability that the Federal Reserve will raise the rate by another 25 basis points. Gold is very sensitive to changes in the interest rates, as higher rates mean a higher cost of storing gold, which makes the asset less attractive to investors. In the meantime, oil traders are still digesting the news about a possible default in the US and the recession that may trigger. Overall, the oil market closed last week on a positive note. Brent crude added 1.78% as investors expect a shortage in oil supply. If manufacturing activity in China picks up, demand for energy may exceed supply. In addition, the US is planning to replenish its strategic oil reserves starting this August. Another limiting factor is wildfires in Canada, which have disrupted oil and gas production in the region. These are the trends of the last trading week, and now a new week and new portion of macro data are ahead. Do not miss our daily news reports to be always in touch with the latest events. See you!